Good morning, guys, and welcome back on YouTube. I haven't been the most active lately on the YouTube, but it's because I've been part of several projects, not just trading related, and I've been able to free up some time. So I said, why not kick back the YouTube video and trying to be more active like we were before. And I had an idea because in today's video, we are going to cover something I don't think we've ever covered, and that's going to be a first for me, is looking at the very long-term trade potential. So there's a trade coming, at least an idea of a trade coming up, and it's something I have never done in a way that I'm looking to do it, which is a swing type of trade toward investment. So a swing trade is something that you hold for a fair few weeks or a couple of months, and investment is rather something that you hold for a few years. So this is something that will sit in between normally if everything pans out, and that's why I wanted to do this video. So in this video I will show you why I'm looking at the trade, how I intend to enter the trade, and when I would ideally want to be in the trade. All of this is part of the 50 cal strategy, but also mixing the fundamental insight I will bring you along and try to make sense of the idea and give you a better idea on how you can identify something that's got a lot more potential as a trade, but also really high odds of success. So in today's video, we are looking to get a minimum 10x trade, which rarely happens in the market. And for me, this is one of the trades of the year, if not possibly the decade, as I've seen a couple in my past trading history, but never fully capitalized. So this is an idea of a trade that has tremendous potential that I want to try to execute from start to finish on the whole potential. Hi guys, so as you can see, what the fuss is all about is US dollar Mexican pesos. US dollar Mexican pesos. Why we are looking at US dollar Mexican pesos and what the trade is all about and why does it have potential. So the first thing we need to be looking at when we do trade, and we're looking at something with potential, good odds of success, yes, but with potential. This is the idea of today's video, is to see the potential of a trade. The odds of success, we've already covered that many times with the 50 cal strategy, how we find, depending on confluences, the amount of confluences and so on. Now we are looking at a very specific case scenario where we're trying to tie the fundamental, which I'm going to explain and break down to you, with the potential of the trade. So for any market you trade, whether it's currency, whether it's stock market, anything you want to buy, you need to first looking at how cheap it is to see how much potential margin you have and how much potential for the currency is. And if you're looking at currently US dollar Mexican pesos, I'm going to put the weekly chart, we can see how far away from the high we are and how much we've been down trading. Why getting interesting now? And why the potential? So the first thing, as I said, we've seen that we've been nicely up trading, and since we've made this crazy high there, we broke past this area and we started to down trade. Why this area? I'm highlighting this area because if you look at what happened here, broke, tested it, but once we broke to the downside, we never been able to recover above, and we started to down trade for a very long time, and now we are starting to clear these as well and coming toward what I believe is a strong buy area, or some strong buy area coming, tied to a major fundamental. What's the major fundamental and what's the current situation? Now, first, we're going to take a look at the very simple tech. The very simple tech is why we are seeing potential buy. So I'm going to show you some possible tech buy that you would find with the 50 cal strategy that might just be worthy of normal trade, but why this buy can be transformed into hugely potential rewarding trade with what's to come in terms of fundamental geopolitical situation. And that's what I'm trying to bring in this video. Trying to see longer term potential for a trade using your fundamental knowledge that you all have access to and I'll try to break it down as simple as possible so that you can understand the ramification of this play and implement them into your ideas for a possible trade. So first of all, if you're looking at this, the first thing I'm going to be plotting to where we are now is obviously key level. So we are around this key area there, which was, if you're looking at this specific region there, was a key area when we were uptrending here. So we've had a nice uptrend, and it was the key area we broke away and made some really good high after that. So like this here, this area, if you're looking at where we at now, this area was key, and we had a lot of price struggle around there, and I'm expecting something similar starting toward this region. So around this region, I'm expecting the price to reject and starting to go to the upside again. But what's the difference here? If we're looking at the big picture of the whole thing, what I'm expecting is for us to have a hard time to break past this the same way we've done with every kind of new all-time high we made in past history of US dollar, Mexican pesos. So for me, I do not see us clearing this anytime soon, just based on the text. It's just based on the text. What we can add on top of it, we can look at from this big significant price move, what the 61 looks like, because that's where we're heading to. And we can see that between this key area and this key area, we are having our 61. Now, if you're looking at this simple fib I drew from the significant price push, for me, that's the most significant price push we've had lately, and that's the way I use the fib. We can see that we respected the 23, the 38, and the 50, even though you can't really see it. If I zoom on it, you can see that we've respected quite nicely all of this fib level, and we are now coming toward the 61 area, and that I would expect, like every fib level, some sort of reaction around here. So now the good thing about this, in a way, good thing, is that we are in between the key area, which I identify as the key area technically, to be leading to some sort of reaction. That's just the simple tech analysis. And now if I'm adding the last bit on the technical analysis, we look at the monthly. And what do we have on the monthly? On the monthly, we do have our EMAs and SMAs coming for the first time. So for the first time in this specific chart, we're coming toward that SMA. And you've seen that EMA currently where we are sitting is struggling and has already the potential for it, as we can see in the past price action. So the monthly is telling me that the confluences I've got has the potential, because as day trade, if you use the monthly confluences, you're adding potential to your trade. That's what you're doing. So you've got the monthly EMA and SMA. You have the major key level area for the massive break retest. If you go back to the break retest, this is the area we're looking at. We have the big 61, that big 61, which every level has been respected so far. And what we have as well, we have the big 16000, which is the big round number. So in a relatively small area for US dollar Mexican pesos, and I said relatively small, it's still a massive chunk because it's a over 6,000 pips area. But for a long-term potential, which we're talking about 20,000 plus here, it's relatively okay. So within this tech area, you have a big 61, which you expect a reaction to lead to almost half. Every fib level, it's just guesswork, but every level has delivered at least half of the move from in between two fibs. So if you're looking at fib 61 and fib 50, the size of the move in between is 18, so you expect at least a 9,000 pips move from 61 in between two areas that are leading to some serious break retest. So you expect more strength, so a 9,000 pip plus, and then you've got the monthly EMA and SMA coming, which are going to be getting reaction, and every reaction we've had on the monthly chart have led to 10,000 plus. So just the tech alone is giving you a hint that this trade is already looking pretty decent. Now, I want to add the fundamental factor to this potential trade. And for that, I'm just going to break it down as simple as possible why I do believe it's fitting like a good trade at this time of the year, or at this time of the decade, I would say, not necessarily the year. And I just work the way through the fundamental and how we tie it to the potential trade. So if I was to look at the potential trade in itself, for me, the way it looks, you would have the initial trade there, and probably you'd be looking at, as I said, the 1700 area. And you would have another possible entry there, leading to similar type of target. And you would also have the latest entry, and that one will lead to a much better move. Now, overall, if we were to look at what you need to cover for this trade, this obviously you will have to cover for this, and this. This is looking like the least interesting trade out of them all. This is already getting interesting. Okay? And this one will be obviously the best you can hope for looking at this chart. So what I've just done is looking at the potential of the trade just based on the tech. If I was to ignore everything on the market, I can expect these to work just based on the tech. If I was to just do this based on the tech, this first trade, if you were to strike with 95% accuracy rate or even 90%, you wouldn't bother with this kind of risk reward. But if you strike below the 85, I think you do have to pay attention to this trade, because one can just set you back, and that's not good enough. But from the second one onward, and the third one, obviously, they are looking already pretty good. And if you're looking at a trade like this, in terms of risk reward potential, we're already in the 5x potential. But what I've said this is a minimum 10x potential trade, and I want to explain why. So now I'm going to show you something slightly different. So if we're gonna keep this, we'll remove the fib. I'm going to do something, and I'll explain to you what I do here. So we start from there, and I'll show you why. And we end up somewhere, that's here. That's it. In this specific period of time, something happened, and I'll show you something else, what I mean. So what happened in this area and this area, and what the hell is this all about? The first area was Donald Trump election, and the price rallied instantly for almost 17% in the first few days of his election. And during Trump mandate, we had a 42% increase in the US dollar strength against the Mexican dollar pesos. Now, leading to Biden's election, we've seen the mess that was the election and the poll and the whole coming, and the election process starting around there. And you see how it affected the US dollar, knowing that we were getting closer to, which I would call the scam election, because there's no way that this election wasn't rigged. Anyway, that's just politics, but leading to Biden taking over the country. And since Biden been elected, and you're looking at this, the US dollar has lost 27% of its value against Mexican pesos. Now, why the hell am I doing this, and where I'm getting at? The first of all is that Biden economy is not US dollar bullish. That's something we can see from the chart. When I said bullish, is bullish against the Mexican pesos. We don't care about any other currency. We are specifically on US dollar Mexican pesos. So why Trump US dollar was bullish and why Biden was bearish against the US dollar Mexican pesos? The first thing is you need to look at, and this is why we are going to implement something that maybe you would ignore on the market, but we are going to implement geopolitical factor into currency trading. How? We're going to look at the politics. What is the politics of Trump when it comes to border? Close border, protect America, protect American business. And back in the days, in the first election around here, what was the whole policy around? We'll close border with Mexico. Why? Because there's too many immigrants. We want to protect US jobs and so on and so on. So the whole thing was to close yourself, isolate yourself from Mexico, and as such to gain US dollar strength against the US dollar Mexican pesos. And this was delivered throughout Trump's mandate, and especially on US election, where if you're looking at the US election, specific of the US election, on the first week of the election, we had 15%. Now remember that very well because I took the gamble to buy pre-election on Trump, and I got rewarded out of it. Now, at the time, I was trading so small that it wasn't really worth it to make it like one of the best trades I probably had in terms of size of the move. Now, this is what I want to capitalize on. So, what I'm thinking here is that if I can do and time something similar here with a much better capital approach, I might end up with a very, very sizable trade. So what was the difference when we switched from Trump to Biden? Biden was the complete opposite. Open border. Open border, let the flow of immigrants come into the country. And what's been happening lately, what we're seeing in this downtrend, is aggressive open border. Why? They are trying to open the border to get a lot more immigrants in so that they get a bigger voting power, because at the minute Trump is leading the poll and Trump is going to smash the election. So they are resorting to import immigrants in a way to make the voting power stronger, or what they're trying at the minute as well is to find like absurd charge against Trump to make it non-eligible to be a candidate for presidency. But at the minute, everything is failing, and I think with everything that has happened for the past few years, there's no way that another scandal like Biden getting elected again would sit well and would not put the country into fire. So, my gamble in this situation is I'm leaning toward Trump being elected. So now, where the hell does this fit with our trade, and what does it mean? For me, it means that coming toward this, I'll show you something that actually we can read. So coming toward this period of time around here, this is US election. So it means that if we were to time some more downside toward this area, we will have the perfect, not the perfect, but a very good technical entry and the perfect fundamental push that we need for that buy. And with the fact that history itself, we could expect at least something similar in the push, 16-17%. Why do I think we can get more? I think we can get more because at the minute, the open border was more aggressive than it was when Trump took over. And that's going to be one of the first things Trump will be doing as well when elected in power, is to reestablish the border properly and most likely throw back a lot of the illegal entries back in Mexico, which means that this will most likely strengthen the US dollar against the Mexican pesos. But now I want to add another factor to this that has not been the case before. What China has been doing lately is buying huge factory in Mexico to invade the US market, and that's the car market, and especially the EV one. You don't really want to give away, but Biden made it worse. And one of the first things Trump would be doing is making sure that China do not get into Americans' business in the car market. And what they've done is they cleverly bought a lot of huge factory to have cheap labor to export directly to US. And by closing border, you make sure also China doesn't eat your market. And Trump is very, very conservative and defending of his American-made market, that it's also a more, like a stronger reason for the border to be stricter, and therefore, as I said, to have a stronger reaction on the US dollar against the Mexican pesos. So this time you've got the geopolitical reason, but you also have the commercial reason with protecting yourself against China. And that will be a reason for me to believe that this area right there, getting closer to Trump's election, will be massive potential for the trade. So how do I intend to get myself into this whole trade? So for me, I intend to size in to the trade as we go down. So which means that my first position is going to be on the retest of this level. Now this retest of this level, if for some reason Trump wasn't elected, or I would be wrong, I still have to pay attention to this. And the risk reward is not great for me in terms of technical. So therefore, I will be entering the position with the smallest of my position. And I think this will be around 10 to 15% for this position. Now, if you start getting toward the 61 and the big round number, which for me, I would use the big round number instead of the 61 to be clever, not miss out on the 61, the big 61, just because I wanted to be super greedy in a way. The risk reward is already positive for me. So this would have to be at least 40 to 50% of my position. So the way I would build up to it, I would do 10%, 40, 50, and then whatever's left on the whole position. And once you're fully in, I think we are able, well, fully in or not, we are able, if you look at what happened before, if we were to just take this move that's done on election and getting it anywhere in this, so I'll take it as the worst case scenario, best reward, it will be if it goes to the last entry, and that's the whole move we see. So if that's the whole move we see from entry, that's 20%. And from what was risk, it's already a 3 to 4 risk reward. But if we start getting it from there and we average things out, we are in a 6. And if we get it from there, that's where we get the 10x potential. So I do believe that we have on the tech and the combination of fundamental a very high chance to come back to this, I would say potentially here on the tech, this minimum here, strong area for a retest. This obviously will be a sizable, I would say, technical level to breach. But once breach, I think there's tremendous potential. And the potential under Biden is obviously to see back the high. And somehow this is what I want to try to get. I want to try to hold something all the way back there. So this is what I would expect minimum from the move. This is the technical, but this is combined with the whole fundamental. But realistically, what I'll be trying out with some of my position, and it will all depend on how fast we get there, how much you get, because obviously if you're trying to get 10x but you get 5x within a few days, you don't be greedy. You take most of it out. If it takes you 3 months to be 5x as well, we don't know how the swap is going to be acting on this. I'd like ideally to go all the way there. Ideally, this would be for me, knowing that if we get it from there, the 61 of this move, or depending where the 61 of it, will be the best case scenario I can get on the technical. And this is where I will be mostly out. So if I can get any of this size here, in terms of move, I'll be happy. But if I get there, this is what I really expect in terms of target. So right now, the US dollar is, as we see, if you're looking at gold at the minute, it's pretty weak against the metal market. But the metal market is coming, so it's an all-time high, and it's coming toward area of strong rejection. The stock market has started to go down as well after all-timing. So the stock market has been all-timing. The gold market is at all-time high. And there's an element on the market that would indicate there should be somehow a big money switch, because everything is at all-time high, which means there would be a transfer of money somewhere. So this play is very much possible and very much likely to be triggered and has the potential. And this is why I wanted to do this video on how to find a trend with potential using still the 50-cal strategy. So what we've done today is simply implement the 50-cal strategy on the tech, but try to combine some fundamental element to it to see if we can increase the potential of our trade and find a better opportunities. So I hope this video was useful and that you learn a few things about first the strategy we use and how to best use fundamental to your advantage. Thanks guys for watching. Hope the video was useful to you. If you liked it, like, comment, share. So I hope this video was insightful and I will catch up on the next one. Trade safe guys.